Good morning, traders from Chicago. Thanks for joining me today. This is episode number 2550. Can you believe it? 2550. We've hit another mid-century mark. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. A reminder that this broadcast is for educational purposes only. These are not trade recommendations and should not be taken as such. So what do we have today? We don't have the pre-market summary sheet from Convergent that's been terminated as a service. So I came up with this just to go over the big pieces. We'll spend less time on this than usual. You won't get the stats and stuff like that. You get those as a member of Convergent, but they just won't be published. The overall market risk posture is mild risk on this morning. The key events in the overnight session. One of the big pieces, there are a lot of releases overnight from Europe. There's the HCOB composite PM, or the HCOB composite services PMIs. Lagarde spoke. S&P Services PMI out of Great Britain. We got the HCOB came out of Germany and France. We got the PPI number out of the Eurozone. PPI month on month came in at 0.6 in line with 0.6 expected. And the PPI year on year out of Europe is negative 11.5, negative 11.6 expected. So just 10 basis points better. Retail sales year on year were much worse, negative 2.1 versus negative 1.2. And then we got the ADP, and the MBA 30-year mortgage rate is now at 7.53%. 7.53%. That's really high. If we look at the history of this, let's look at 25 years. This is what it looks like. This is from tradingeconomics.com. Look at that graph. This is for the last 25 years. You could see what the MBA 30-year mortgage rate has done, and it's climbing. And that's going to put some pain on homeowners and those who are looking to invest and things like that in property, especially for the 30-year mortgage. So that's what that looks like. Going back, sorry, I have to kind of fiddle around now that it's not summarized into one sheet. ADP was the big one this morning. ADP missed dramatically. US ADP, remember ADP is a private payroll company. And at 8:15 Eastern, they came out with 89,000 jobs created in the month of September. ADP generally front runs the non-farm payrolls, which is this Friday. The expectation was 153. It was about half of that. So we saw the market responded with a quick splash down in the indices. We do get at 9:45, 15 minutes after the open, we get the S&P Global Composite PMI and Services PMI expecting 50.1 and 50.2 respectively. And then we get ECB's Panetta, probably not much, but at 10 o'clock we get ISM Services PMI. This can be a mover, expecting 53.6. At the same time, we get factory orders and ISM Services Employment. Bunch of other numbers from the ISM at 10 o'clock that are are less significant. At 10:05 this morning, we get Fed's Schmidt. And then we get the EIA crude oil and gasoline inventories, and then we get Fed's Goolsbee at the same time, all at 10:30 Eastern. Fed's Bowman at 11:25, ECB's Lagarde at 12 Eastern, and then we get the Korean inflation rate year on year this evening, expected at 3.4%. And that wraps up the day. Those are the key events. The current auction condition is multi-distribution. So that tells us the market is in an active price discovery this morning. The overnight volume by the way, in the S&P is a whopping 431,000 and a half. So 431,500 uh yeah, 431,000, almost 432,000. A reminder that the overnight stat shows that the edge of what we consider to be normal is 310,000. This is dramatically higher. It's beyond second standard deviation at this point. So what do we know? We know that this is extremely high. Okay, so this is the overview chart here. Again, the volume is right up here for the S&P. You could see also the NASDAQ, very, very high volume. This morning, the NASDAQ doesn't breach the 200 mark, 200K mark. We're seeing a nice little pop in the bonds and the 10s, putting pressure on yields. And what that's doing is it's supportive of rallies, supportive of rallies in the indices. So we're getting a little bit of relief on yields in the overnight session. We're seeing a big bounce in silver. Silver's jumping 3.73%. Gold is up 68 basis points, and then copper is up 1.46%. Those are the key factors here. The range is 46.5 points. Again, the normal range, the edge of what is normal for the S&P. The first standard deviation is 40. We're at 46.5. Again, this is an outstanding number. What is this all? What are these stats saying to us? The stats are saying that there is quite a bit of force behind the movement. There is quite a bit of range, so there's quite a bit of price discovery behind the movement because we have the 46.5 points worth of range. And what this means is it's likely to continue through the session. So this is another session just like yesterday. I warned yesterday morning that we are likely to see a pretty active session, and it's very likely to continue. So let's take a look at what we've accomplished yesterday. So yesterday we simply had the continuation move from the run from all the way up into almost the 4,600, right? So we've had this push higher, and then we formed this impulse. This is the impulse right here, all the way down to 42.77. This is the impulse move. We still have a large open gap that we have not fixed. You could see it here. Okay. And we had our pullback move, which was a relatively weak pullback to 43.71. And then yesterday we had our continuation. We had a B-shaped profile. And with it opening at the upper end of the range, finishing at the low, this is a legitimate B-shaped profile, meaning long liquidation. So longs are being squeezed. We still see that the point of control here is at 15. So 43.15 remains. This is pretty bad, right? 43.15 remains the key price in the area. That price is approximately 50 points up. We closed at the low end of the range. The point of control for volume and TPO both ended up at the low end of the range. Very high volume yesterday. And so the thing to look for today is how do we treat any attempt lower. Who recalls the key price we talked about? I don't know, last week sometime. I talked about these key prices below. Who recalls that key price that is expected to be the target to the downside if the S&P gives up to 4,300? especially if it gives up to 42.95, what was the key price that we would be looking for to retest bounce as part of the price discovery process? Okay, that price is 4, 2, 3, 0, 50 technically, but let's not get too picky. 42.30. On the way down, the key prices on our price map yesterday were 42.95. Wow, I'm writing really well today. This almost looks like Khan Academy type writing. 42.95, 42, 62, 42, 50, and the grand test 42 to 30, and that's the one I'm going to underline. That's your MCV POC down here. Okay, and so we kind of came down, slowed down at the 42.62. We gave up the 42.95. There was a really, really nice setup at 96.50 short yesterday. Just a beautiful risk reward setup. Short on the retest higher into the 40. Look at where it went yesterday, 43.17. Do you remember the price up top? Yes, you do, because you're paying attention. The price up top is 43.15, and that's the MCV POC above, right? So it went to 43.17 yesterday, rolled over, jolts came out. Jolts came out, and Jolts disappointed pretty badly. Jolts were way off yesterday, and the market exploded to the downside, took out the delineator for the excess low around 95. See this little divot here, 95, and the excess low got tested, so we expect immediately for it to take out 42.77, which it did. We have a group of singles left behind yesterday, and that's the key thing we have to watch out for. Look at where the overnight high is. The overnight high is right up against the singles, and then it went to 42.62, consolidated for a bit, and then it broke through and it went to 42.51 and a quarter, almost at 42.50. So boom. Boom, we got the 43.15, we got the 42.50, we missed it by 5 ticks, okay? And then what do we do in the overnight session? 42.35.50, so we've missed this by 5.5 points in the overnight session before the bounce, okay? So we missed the 42.30, and then this is where it comes from. It comes from this very important balance zone established mid-April all the way out to basically the end of May. And this is a very balanced, very high volume area. And the point of control of it is right here, 42.30, the overnight low of 42.35. And we're here messing around with 42.72. We're inside of the value area of this MC point of control. So we'd want to see it throttle through. We'd want to see it get above and beyond, get above and beyond 42.82 for it to have a chance at retesting 4,300 from below. A lot of volume at 4,300. Not expecting it to make it up there. And then if it takes out 4,300, then guess what? 43.15 becomes your key runner target. Okay, if it hits a 43.15, you tug on the wire like they have here in U.S. buses to request a stop, and then you exit in that area. That's what's expected. So this is what things look like. Look at these single prints right here in the S&P. Pretty weak structure against some pretty important areas. You can see the overnight session went right to the single prints there, and that's what we're looking for. today. We're looking for the market to take us back up to retest these singles. If they fail to push through the singles, then you're looking for another low. By the way, yesterday kind of qualifies as a trend day. It isn't quite a trend day. Why? The IB was quite wide. First of all, we did not multiply the IB down. We don't have clear multi-distribution drop going through. We have a B-shaped profile. What B-shaped profiles mean, and those of you who are attending the accelerator program at CT next week, we're going to go through this in depth. What this means is that the market saw these prices, it opened up here, saw these prices as unfair. They moved down, and the only way this shape could be created, either with TPOs or with volume, is if people start to push back. So if people start to push back, that's when you get this. So what this is doing is it's not really in an active price discovery. It was for a period, but it found balance. What we have here is balance. For many people, the value area from yesterday is actually valid. Okay, and this is long liquidation, meaning buyers are being squeezed. The opposite is a P-shaped profile, which opens at the stick, at the low, and then settles somewhere up here. And what you have is a market that has pushed up high enough to bring in sellers, and this is what's called short covering. This is a short covering profile. Okay, so yesterday having squeezed, and by the way, if you don't watch rotations, man, you're missing the best part of the show. Look at these rotations. A period right here, the first half hour. Each one of these brackets is 30 minutes, right? 30-minute brackets for TPOs. This is a TPO chart. Look it up. You could see the extension of B bracket. B bracket is when the news came out. B bracket starts at 10 a.m. Eastern. And then you could see the single prints taking place from 42.9850-ish. 42.9850. This is the area we'll be watching today very carefully, all the way down to this 42.82, which is exactly where the overnight session stopped on the high. That's the overnight high. This area here represents what are called single prints, and we're looking for the market to test these. And what happens with single prints is you either poke and fall back, but most likely once you come back into single prints, you are likely to go to the other side. So this generates, in my opinion, this generates a great opportunity for a limited risk, established reward type of trade. You do have the 94.50, 95 in your way here from both the excess day and the day before yesterday's low. So 95 is expected to be a bit of generate a bit of a hassle here. We have that as a stock zone, as you can see here at 94.50, but in general we're looking for it to go back to 98.50 today if it continues the way it is. So as we look at how it rotated, we could see that the market started to support, these collisions actually belong over here. Remember, these are 30-minute bars that have been pushed to the left. And then we start to move up, and then we get these collisions back here that stop it from continuing. And as soon as the market breaks to the downside, breaks a bracket to the downside right here, it establishes a new short looking for the low, and you can see it's balancing out. So this is a market that actually balanced out, and we're above the point of control. Currently we're trading right here. We're above the point of control, and in the overnight session we tested the 42.82. So this morning I'm going to look very carefully to see, does it fall? Let's compress this profile. Does it fall through the point of control, the TPO point of control, the volume point of control, is to fall through and start to push. The settlement price is right here at 64, call it 65. Does it fall through and continue to push? In that case, you'll get your lower low and most likely start to move back. But this is very likely to have a hard time pushing lower. Yesterday, the sellers actually looked exhausted. If you look at the order flow, you'll see that it did manage to get prices lower early, but as it tried and tried later in the afternoon, it was confronted with a lot of liquidity on the bid that was getting hit to the on the sell side. You'll find that there are a lot of big dots as it was pushing lower yesterday. So I'm expecting this thing to struggle a little bit on the way down. So any retest of 64, 62, see this? Just a lot of fighting on the way down. Okay, 62, 64 is the LIS this morning. This zone here is going to tell us a lot. You have your full session VWAP, full session mid there. You have price structure there. You have an important reference from yesterday right here. This is where the auction actually found its first bounce and then came down and checked into the close. So 64, 62 is going to tell me which bias I should have. Okay, so I'll leave you with that. I covered a lot. There's a lot going on. Really good structure. Look at this beautiful crude action here. Crude yesterday is expected. I talked about this. As expected, I'm looking for it to push right back into balance, potentially into the 90.50. Didn't manage to get it. It went to the 27. Expected it to 90.50. And then this morning it's opening in a gap again. And we just got the all-important 87.50. If it cannot hold the 87.50 today, then you're looking at the point of control in this area, which by the way is the overnight low, beautifully tested right there. That price is 86.95. We went to 86.96, missed it by a tick. And then if it cannot hold 86.96, then you're looking at 85.50 in crude. And just be patient with this product. Be patient. Wait for it to do its test and kind of jack around and then extend to decide if you're going to get short into the overnight low or if it's responsive. This morning we have an open auction, a two-way auction in crude. We can see that both sides are testing each other. Okay, good luck today. Hopefully you gained a lot today. I explained a lot. I'll catch you tomorrow morning. Take care.